Squire Sanders is one of the, I think, depending on which index you look at, 12 global law firms, and I'm a partner in the corporate department, primarily based in Birmingham. So as a lawyer, I stand in something of the middle ground. We act for lenders and we act for borrowers. We act for investors and we act for investees. And we act on equity and we act on debt finance matters. So in a sense I hear it from all sides. So I thought the best contribution I could make would be perhaps to see if I can just present some objective viewpoints on future of funding for medium-sized enterprises, backed up by a bunch of statistics that I get bombarded with on a virtually daily basis. So, shoot me down in flames, but my perspective on the current environment is that although challenges remain, so do new opportunities. And then I was thinking, well, could I phrase this in the words of a song? I was tempted to use the Beatles' 1967 song lyric, I've got to admit, it's getting better all the time. I thought I'd be shot down in flames for saying that, although the lyric does go on to say, it can't get any worse. But I think I'd probably choose Ian Jury and the Blockheads. I'm also over 50, Justin, so reasons to be cheerful. So what are the reasons to be cheerful? Looking at loans from loans by banks to businesses and corporates. Well, they fell 5% last year, but lending to UK small and mid-sized corporates rose in March by the largest rise in almost 2 years. And the Item Club, the Ernst & Young Item Club, I'm going to be mentioning lots of accountants because we work with accountants lots, so it does me good to mention them. The EY Item Club now forecasts that corporate lending will rise by 3% to 440 billion by the end of this year, and by 8.5% to 447 billion in 2014. So there's a reason to be cheerful. But what I'd like to just touch on is some of the other reasons. Why do I think it's getting better? Or why are there reasons to be cheerful? But what are the challenges that remain? Well, just to canter through, and I probably won't have time to canter through all of these, so interrupt me if you get bored. But Mervyn King came to Birmingham in March and spoke at Villa Park, and he said that the liquidity crisis for the major banks is over. So that's good news, if that is the case. And certainly LIBOR and base rate have virtually converged, whereas they were 10 or 20 basis points different in the height of the credit crunch. So is it liquidity, or is it demand? In the UK, the quarterly business distress index, which was published at the end of April and surveyed 500 businesses, found that only 5% identified an inability to secure credit or bank loan as being a key problem. Actually, 32% said that fuel and utility costs were their biggest challenge. That may indicate that lending to business is improving, or it may perhaps indicate that businesses are deleveraging and adapting to life without access to credit from the banks. The Bank of England's agents report in April, which surveyed 370 firms, found that mid-sized corporates said that access to borrowing was easier, especially for, if you like, business as usual kind of finance. Where the challenges remained was finance to change, for example, for acquisition. But they did say it's available, but it's more expensive. In the US, Deloitte have just published, another accounting there, Deloitte have just published their mid-market perspectives annual survey, which takes place in March, and it's only just come out. And Deloitte found that access to capital is not standing in the way of investment plans in the US, whether to drive sales or to make acquisitions, except amongst the smaller end of the mid-market space, so the perhaps the S bit of SMEs. And in fact, access to credit ranked 9th out of 9 main obstacles to growth. So it was the last obstacle to growth. It was cited by only 9% of respondents. That's half the number compared to 2011. And it ranks behind, this is the US I'm talking about, it ranks behind economic uncertainty, healthcare costs, these are in order of importance. Healthcare costs, number 2 concern in the US. market demand, regulatory compliance, and I know I was talking with Lisa about the regulatory compliance aspects of peer-to-peer lending in the States just before we came on. Input costs, government budget cuts, skills shortages, and technology. So other reasons, I'll come back to these during the discussion, so let me just counter through. Other reasons to be cheerful. A plethora of government initiatives. Now, the government may have been slow getting off the starting line post-credit crunch, but there are a whole raft of initiatives coming through. Funding for lending, that was extended at the end of April, another 80 billion for the rest of this year. It means that for every £1 lent, banks will be able to access £10 from the government. That's got to be positive news. It's got to help. It's got to make lending cheaper. The National Loan Guarantee Scheme in the US, similar to Small Business Administration, which is a guarantee arrangement. The Enterprise Finance Guarantee, the Business Finance Partnership, Business Bank, money from the government going into peer-to-peer networks. It's got to help. There's been a market response, new sources of funding, like peer-to-peer lenders. Here's an interesting statistic. Starbucks is now amongst the 200 largest banks by deposits in the US. It carries $3 billion on their in-store card. That's interesting. And then other new players like the Business Growth Fund. And hopefully, and Peter may want to say something about this, that we're seeing the return of equity markets. The main market certainly recovering. Those of you who looked at the paper yesterday would have seen more IPOs, Partnership Assurance Group coming to market, intended £1 billion float, raising 150 million. Merlin Entertainment's intention to float, Crest Nicholson floated earlier this year, eShore, Countrywide. There were only 2 floats on the main market last year, I think. I can see Mark Russell in the audience, he'll correct me if I've got that wrong, but I'm thinking Direct Line and Energy Assets Group. So it's getting better, but there are challenges. Now, perhaps I'll break there and come back to challenges later.
Yeah, that's a good moment to break. Edward, thanks. Just before I go on to Peter, I could hear someone else in another room. Has that stopped now? I think it sort of has. Could we shoot them? Not literally, I should say, to Americans in the audience.